A very good morning to all. Thank you for joining this webinar on how AI can shape insurance CX journey. This live event is being jointly conducted by Aspire Systems and Aite-Novarica. My name is Bindu and I'm your host for today. Let me quickly introduce the speakers. We have Stuart Rose. He's a global product marketing director and business consultant with 20 plus years of experience in the AI, analytics, insurance, and financial services industries. He has worked with companies in the US, UK, Europe, Latin America, and South Africa. He is highly adept at driving market awareness and product strategy, empowering sales teams, and executing thought leadership to drive sales growth. He is currently the Senior Strategy Advisor for Insurance at the Aite-Novarica Group. And about our next speaker, Maha Santaram, she has 18 years of experience in software development and delivery for a multitude of customers across the globe. She has also put in years of work into extensive development and implementation in banking and insurance sectors. She is an agile transformation specialist and comes with technology expertise in trending areas such as microservices, DevOps, cloud, user experience platforms, AI/ML, and RPA. She currently heads the insurance practice at Aspire Systems. Now, let me give a quick intro about Aspire Systems and Aite-Novarica. Aspire Systems is a global technology services firm with expertise in enterprise solutions, digital services, software engineering, testing, and infrastructure services. They work with independent software vendors as well as enterprises in retail, banking, financial services, and insurance sectors. And they have a growing presence in the US, UK, India, Middle East, APAC, and Europe. And product engineering being their core DNA, backed by 20 plus years of experience, Aspire can help bridge gaps and unearth opportunities in the insurance value chain. They are also a certified Guidewire Consulting Select partner. Now, about Aite-Novarica Group. They are an advisory firm. They provide mission critical insights on technology, regulations, markets, and operations to hundreds of banks, insurers, payment providers, and investment firms, as well as the technology and service providers that support them. They have a team of experienced researchers and consultants that include senior technology, strategy, and operations executives who actually help provide actionable advice to their client base. So this is a brief about Aspire Systems and Aite-Novarica. Now let me quickly run through the agenda for today's session. Stuart will be talking about the top 10 trends in various insurance sectors, and he'll be addressing on the business capabilities and priorities impacting insurance, the growing need for digitization, and insurers' interest in AI and its role in underwritings and claims. And Maha will be presenting case studies in each of these areas. Now, before we dive into the session, just a quick instruction that I would like to share. If you have any questions during the session, please type them out in the question tab located at the bottom. The questions will be answered during the Q&A session that we'll have at the end of the webinar. So stay tuned till the end. And thank you once again for joining the webinar. Enjoy the session. Over to you, Stuart.
Well, thank you very much, Bindu. And again, I'd just like to thank Aspire Systems for inviting me to speak on this absolutely fascinating subject of how AI or artificial intelligence can really impact the customer experience, really from quotation all the way through to claims. However, I thought I'd kick this presentation off really by looking at what are some of the trends that are impacting the insurance industry today. So this slide is looking at the P&C side of things. In a moment, we'll look at the life annuity and benefits trends. Now, like I say, we've only got an hour, and I've got to probably spend all of that just talking about these trends. So I don't have really time to dive into each of them, but I think, again, you can look at it here of some of the topics we're going to cover a little bit later on, which is, like I say, is digitalization, AI, data, and the cloud. But to me, probably one of the most important trends on this list, and coincidentally, it's the first on the list, these weren't done in any particular order, is InsurTech goes mainstream. There's no doubt that investment in InsurTech companies continues to grow. even in the face of this global pandemic, or like I say, recession now that many people are starting to talk about. And I think you could say that even some of the startups over the last 10 years have now become more mature, and the space is actually seeing increasing larger funding rounds. But really, the most significant trend within the insurtech world is the new attention it's actually getting from what I would consider is established vendors out there, particularly the core system providers. These traditional core system providers, to some degree, either see themselves now as insurtech firms because it's a trend and a buzzword, or at least the facilitators of insurtech adoption. System providers are expanding their partner ecosystem to allow insurers access to multiple different insurtech startup solutions through a single point of entry, APIs, etc., that really allow them to create that seamless customer experience that we're talking about throughout the policy lifecycle, from quotation through to claims. So like I say, that was sort of some of the trends that we were seeing on the P&C side. Again, if we flip the coin and discuss the top 10 trends in the life, insurance, annuity and benefit space, as you can see, there's a lot of overlap between the two industries. Again, digitalization, data, predictive analytics, insurtechs appear on both lists, which I guess you could think is not that surprising. But I think one of the things that really struck me out on this list here is number 7. Again, insurers are looking at creative ways to attract and retain talent out there. Even before the pandemic, and then there's talk of this great resignation, insurance companies were really facing a talent shortage. When you think about it, skilled resources like claims adjusters, underwriters, and agents are in those baby boomers ages. They're beginning to retire and unfortunately not being replaced. And to make matters worse, there's not a steady stream of graduates that are coming out of university and colleges wanting to get into the insurance industry. Hence that idea that insurance companies really need to prioritize that strategy of it's not just attracting them, but how do they retain that talent long term as well. So the good news is, in my opinion, I think AI and insurtech boom is actually helping. These new technologies are actually drawing a new generation to the industry as they help and develop specific solutions for both the P&C and the life insurance carriers. So again, the last 2 slides really looked at what are the trends impacting the insurance industry. Maybe now we should get maybe a little bit more tactical. Where are insurance companies investing a lot of those IT dollars? So this slide shows some of the results that, like I say, a survey that Aite-Novarica conducted last year. And we asked a series of questions to over 100 different insurance executives. And subsequently, here are the conclusions. Hopefully you can see there some of the writing may be a little bit small. But I think one of the things we begin to see is there's still a little bit of distinction between the changes for large carriers. And when we say large carriers, we mean predominantly insurers with written premium above $1 billion and the mid-sized carriers. In general, those larger carriers are really focused on growing their business. They want to get bigger and better. They want to increase their revenue. While the mid-sized carriers, it's a little bit more tactical. They're associated with reducing some of their operational expenses. But if you look specifically at what I would consider as those top 4 capabilities out there, you've got data and analytics. Again, this is probably not a huge surprise to everyone on the call here today, because everyone wants to be a data-driven organization. Next priority capability is ease of doing business, especially from an agency and distribution perspective. And in many cases, when we talk about that customer experience, that begins with the agent out there. Third, you've got speed to market. Insurance is a highly competitive industry, and speed to market with rate changes for existing products as well as new products can often be a very key differentiator for them. And then finally, the fourth top capability is optimizing those internal workflows. In my opinion, I think one of the positives that's come out of the pandemic and the working habits for the last 2 years is that many organizations have had to review many of their internal processes because the existing workflow did not necessarily work in a remote or virtual environment. So to me, really, is that's the last point that is really critical. While a lot of focus has been done on improving the customer experience, that really can only be achieved if insurance companies improve their internal business processes. And again, I think that really helps when we talk the big picture of what this webinar is really about. So I wouldn't say let's take a step back, but I think insurance has a lot of unique characteristics. When you think about it, it's probably the only product that is sold that the manufacturer, in this case the insurer, does not know how much it costs to produce that product. You think of a car manufacturer knows how much the development costs are, the parts and labours to make the vehicle, the profit margin, and that all determines the list price. But an insurance company has no idea when they sell a product what the severity and frequencies are going to be on that policy. Secondly, from a customer's perspective, it's the only product that someone buys that I hope never to use. No one really wants to make a claim out there. So it adds up to this whole unique that insurance companies really have a customer conundrum. How do you interact with your best customers when you really don't know much about them out there? So the good news is there is some insurance companies that are getting over this customer conundrum. How do we interact with someone that we don't really do? So to overcome this challenge and really develop a digital omni-channel experience. So at this stage, I'm actually going to hand it over to Maha, who's going to talk about a very specific case study that Aspire have done with a UK insurer.
Thanks, Stuart. A seamless customer experience across channels is an expectation from customers, not only in insurance, I think across industries today. I think developing digital channel solutions like a mobile app is a good way to retain and engage with customers. I think this also increases the interaction with the customers and facilitates to understand the customer lifestyle and behavior much better. Right, and also enabling self-service has become an imperative need, right, especially during the pandemic. I would like to pick up a specific customer scenario. This is with one of the leading motor insurance provider based in UK. So their claims life cycle had a number of challenges, right, that was negatively impacting their loss ratio. So, in the view of improving the customer experience and also reduce operational cost, the customer decided to redevelop their entire claims platform. And this became an imperative need during the COVID, as the insurer had to provide all the services for their customers that they were handling through agents remotely. So the insurer identified, I think, from the data that they had, that additional driver midterm adjustment is the most often done by customers via call centers, as it was not in the web portal. So the decision was to add the additional driver midterm adjustment to the customer portal. So we actually redeveloped the entire claim systems from FNOL to claims resolution and enhance the customer portal to include various features. Like some of them were like say mandates to govern payment values to claimants and suppliers. And then we also integrated the telephony system to the agent portal so that we could offer a single view of the customer. Similarly, I think and there was a lot of documents that were required to be scanned for claims evidence. So we automated the scanning of documents, and similarly for the customer relationship management to manage like the customer communication workflow and to really keep them up to date on the claims process, and also update policy adjustments. We provided those features on the customer portal. And then we also enabled inbound and outbound third party data exchange for communication with the deployed suppliers. Right, with all these automation in place, now really the insurer had a lot of savings on the cost. The solution cut a lot of operational overhead that they had, and also reduce the expense on the external system. Right, this overall reduced their claims cost. And I think data and analyzing data is key to delivering better customer experience in today's world, and also to improve operational excellence. Stuart, can you share your views on data?
I certainly can. And like I say, I love the term that you used there, is the electronic notification of loss. I think that certainly is the next evolution of the first notice of loss. So, as Maha said, like I say, I think one of the things when the insurance companies are looking at improving that customer experience, quite often it comes down to data. And you could always argue that insurance always has been, and always probably will be a data-driven industry. But in my opinion, up until now, it's really been focused on internal structured data. Information that's coming from their transactional systems, whether that's a policy administration application, a claims management solution, whether it's underwriting workbenches, and even agency management applications. But as you can see from this diagram, this data, this internal data, is really just the tip of the iceberg. There is so much more data below the surface that insurance companies can utilize. So when you think of all of that external data, there's really three types that I think is changing the insurance industry. The first type is unstructured data. And like I say, the insurance industry has always probably been a very heavily paper-based industry out there, whether the information is on adjuster notes, it's police reports, medical records, underwriter information, and emails. In addition, they now have images and videos being collected by insurance companies for things like claims and property inspection. The challenge has been, though, up until now, insurance companies have found it difficult. While they've been able to store a lot of this information, they haven't been able to analyze the data for useful insights. And that's where I think the industry is changing, because new technologies like text mining and sentiment analysis, this is where they're beginning able to gain useful information from what was previously inaccessible data. The second category is what I would consider is third-party data. Insurance companies are supplementing their internal data with this third-party external information, whether that be government demographics data, weather data, geospatial imagery, to name but a few out there. And in fact, I think this is a huge growth area. And I was actually working with one insurance company last week, and they actually said that they collected over 22 different data sources that they were using in just one specific line of business. And the last type of different category I think is changing industry is what I would consider is new data. Data that previously probably wasn't even imagined 10, 15 years ago. When you think about it, social media, data on Yelp or Facebook, Craigslist can be extremely invaluable to an insurance company. And then you have IoT data. Like I said, the information from smart home sensors, whether that's your Ring device, Google Nest out there. You've got a huge amount of information about the individual from their smartwatches. And of course, you've got telematics data. So again, I'll hand it over to Maha, who's got a great use case of the use of telematics in insurance.
So this data is enabling insurers to not only make effective decisions, but also to deliver risk prevention to their customers, right? And this is a scenario with one of the large insurance providers who provide insurance for fleet owners. So they enable fleet owners with, like, say, asset protection, tracking of driver behavior of their hired drivers, and they were able to do this integrating with the vehicle telematics data, right? The insurer provided, like, say, crash alert, tow alert, theft alert, and this really enabled the insurer to use driver score to profile drivers and really prevent risk, right? So I think with the availability of so much data, there is also a lot of interest in AI deployments that's coming across. And I think, Stuart, how does it really differ between mid-size and large-size insurers?
Well, I think there's a lot of change. I think the point I want to really make off this slide is I think what it is having all this data is a limited value if you don't have the right tools and the technology to analyze that data. And I think that's where insurers need AI and analytics to be able to determine if that car is in a crash or not in a crash, then to send out a message to the towing company, or maybe to even make an alert for theft. And I think, as I said, I think what's really is enabling the insurance companies to do that, of course, is AI. And this is really one, it's the main topic of this webinar, but I really think this is a game changer to help the insurance companies improve their customer experience. So I think, as you can see from this slide, the maturity levels across the large and the mid-size is varying quite a bit. Certainly, the larger ones are probably more mature because they've got bigger resources and bigger budgets to be able to deploy and use this system out there. The other thing I would say is when you're discussing AI, there's many different definitions of it. And I think when certainly at ANNUITIES, we tend to break it down into 4 categories, how these are helping insurance companies. So I think the first category, of course, is machine learning, using mathematical and statistical algorithms to identify new patterns from the data. Like I say, can we predict future behavior for claims like fraud or something? Or how can we help it in the underwriting cycle? And we'll get onto the use it in underwriting in a few minutes. The second category of AI, I think, is image recognition. Again, the ability to analyze digital images, videos, to extract meaningful information. So again, I think we're seeing a couple of examples is the use of aerial imagery to assess a remote location. How close is that building or whatever else to a floodplain or other types of potential additional risks out there? Or can we analyze the photograph to assess how much damage is done to a vehicle, or even to see whether that photograph has been used in previous claims and maybe that's an indication of fraud out there? Then you've got voice recognition. So many insurance companies use call centers out there. Can they turn that speech into a rich data source that they can then potentially analyze using sentiment analysis to determine, do we need to escalate this particular call? And then finally, we've got the unstructured data, and I raised that a few minutes ago. And again, how do we mine this textual data? And that may be emails. It's not just simply handwritten notes out there, and translate that into digital information that an insurance company can use to make intelligent decisions. So again, maybe Maha, you can share some of the case studies that Aspire are working on in AI. I know that you've got a huge amount of experience in this space.
Absolutely, Stuart. See, in my opinion, AI does not replace underwriters or adjusters, but really aid them in the overall process to eliminate manual effort they spend on repetitive tasks or time-consuming work. Right? See, though many of the insurers have implemented digital solutions today, I think still there is a lot of inquiries that come through emails. Right? In one of the insurer scenarios, we faced that the submission enquiries came via email, and there were also emails on like, say, grievances. So a lot of time was spent on really triaging this email and raising a request for processing the submission to the core system, right? So what we did was we developed an AI based model that could read these emails, categorize them, and raise a request for processing. This model could also analyze the pulse of the email and then really prioritize the request accordingly, right? So this is one example of processing of unstructured text. And In fact, this really helped the insurer save a lot of time that they were spending on triaging this email, and then it also helped them on the turnaround time. Right, they could respond faster to their customers. And with another insurer, as a part of the self-service portal, we have developed a voice bot to raise a claim and also to support like any queries that come to the customer service, right? And Stuart, what does it really mean going from digital to digitization?
Well, I think that's a great question there. Like I say, I think there's no doubt that insurance companies are all saying they want to go digital, and I think the trouble question is that, like, to me, insurance companies have been going digital for years. They've created a chief data or digital officer out there, and they've taken what I would consider as traditional printed documents like annual statements, billing invoices, and converted them into PDFs and then emailed them off to policyholder. Now, there's nothing wrong with what I've suggested there, but is that creating a digital customer experience? Is it something that's not something today that a consumer would compare with have a digital experience from Amazon or someone like that? Again, sending out annual statements via email is going to save you money. You may even consider it a green initiative out there. But in my opinion, it's not really a true digital experience. To me, to transform the insurance industry and go from digital to digitalization, insurance companies have to really rethink many of their business processes out there. I say it means bringing all those new data sources into the business process, which we just talked about. It's the ability to automate simple insurance tasks, and then really using advanced analytics to determine the next best action in the insurance life cycle. That, to me, is what I would consider as going from digital to digitalization. But if you can see from this slide, you can see that insurance companies are certainly doing a better job in this area. And this is, again, it's a survey that Aite-Novarica conducted in May last year. And this one, we asked actually over 130 different insurance executives how their digital activity had changed in the previous 12 months. And probably, as you would expect, it didn't just increase, it increased significantly. Like 75% is a big number to see significant levels of increased digitalization out there. So if we now talked around digitalization, AI, and all of these other terms, how does it then fit within the underwriting and the claim space? And I think, going back to the point that Maha made earlier on, AI is not there to replace underwriters. It's there to augment and empower them to do better decisions. Like I say, I tend to think that AI really should stand for augmented intelligence rather than artificial intelligence. So, like I say, for simpler risks, an AI engine can certainly help reduce that really boring manual dual entry of submissions by automatically ingesting text from structured and unstructured documents and then pre-filling that data into rating engine, underwriting workbench, and policy systems. You ask any underwriter out there, that's probably their number one task that they love to eliminate. They feel as though all they're doing is just replicating something that's already done. But they also are looking at AI to help them better understand more complex risks out there. Again, the ability to analyze more data. We talked about it earlier. How useful would it be for an underwriter to have at their fingertips, using aerial imagery to assess the property, especially how close they are to a floodplain? Do they have overhanging trees on that property? Has a swimming pool or trampoline been added into it? Or if you think about it from the life side, how can electronic medical records, even data, as you said, from smartwatches, transform the ability for them to assess the individual for life insurance? Like I say, as I said earlier, insurance is still very unique. And the insurance companies that have been successful are the ones that can understand and price the risk more accurately. But it's also not just at an individual policy level where AI can help. I think it's also has the ability to fully understand and undertake risk portfolio analysis of all the books of business. The last thing you want to do is be overexposed for a line of business with properties on the east coast of North Carolina, where there's the potential for a lot of hurricanes that come through. So again, that's to some degree the very big picture of how AI is helping in the underwriting process. Again, I'm going to hand it back to Maha, who's going to go into more details specifically of how ASPAR of helping insurance companies in this space.
Sure, Stuart. This is a scenario with one of the large insurers in individual and group life business. This is based in India. So they faced a lot of pain point and verification of medical and financial details in the underwriting process. Right, just to provide some stats, right, they were almost taking 30 to 45 minutes on a single application, and almost like 4 to 6 days to verify medical and financial details, right? And the policy issuance time was also somewhere between like 7 to 8 days, and there was a lot of manual effort that was spent, and there was difficulty in third party coordination, because here there were a lot of partners who were involved in, as a part of the distribution channel, and high turnaround time for issuance of policy, right? So the medical underwriting required like verification of records related to, like, say, family medical history, personal medical history, their lifestyle and habits from medical examination reports, and declaration of health report, and general practitioners report, right? Like and so on, like so many documents. And similarly, financial underwriting required analysis of financial documents like bank statements, and a lot of financial documents. So what we did was, we have developed a system that accepted data input from multiple sources in various formats, like, say, such as medical reports, past treatment data, bank statements, and then these unstructured data from various documents were extracted, categorized, and standardized for risk assessment, right? The identified risk was evaluated against underwriting guidelines to obtain a final underwriting decision and recommendation. In fact, this process involved like reading different document types, like, to name a few, like, say, blood reports, medical bills, GP reports, X-rays, MRI scans, and then really segmenting those documents, and then classification of those documents, and then detecting every field in this document, right? And then extraction of the entity through technologies like NLP, computer vision, and then image understanding, and then really training the model to handle and provide recommendations around the underwriting decisions itself. And this really delivered a lot of business benefit to the customer. Just to show a few sample stats here. If you look at it, the straight through processing of the records improved like from 75% to 90%, and then the number of applications that got approved under 5 minutes, I think it raised to 90% from 50. And then there were a number of records that were getting approved in 3 to 5 days, right? That got reduced to 3%. And then applications that were evaluated in one day, almost all the applications got evaluated in one day, right after this automation. And then the application policy conversion rate also, like, really increased to 85%, right? This were some of the business benefits that this insurer could achieve by automating or deploying AI in the underwriting process. And I think in a similar way, AI has a lot of impact in the claims process as well. Stuart, would you like to share your views on the same?
Yeah, I'll do that in a minute. I'd like to say a couple of things. I just want to. One, that statistic you showed on the last page is scary. It's like, does it really take 7 to 8 days to issue a policy? That to me is, you think in these days that wouldn't be happen. But I think the positive when you look at this slide here is the 100%. The fact that applications are being evaluated within 24 hours, that to me is a fundamental change to business, because it means you no longer have a backlog. Because once you have a backlog, you're never going to catch it up. So, like I say, it's a huge transformation, in my opinion, on helping insurance companies going forward. So like I say, if we now move on to the claim space, like I say, I think this is where AI probably has the greatest potential to enhance that customer experience. Many people out there say that claims is often referred to as that moment of truth. So again, the ability to provide an exceptional customer experience is essential in keeping that customer. So if we look at where is AI being applied within the claim space, well, I think probably the most obvious is how it's being used to detect claims fraud. I think the advantage that AI brings to the table is it has this ability to not only analyze an individual claim, but it can look at all of the claims data and to some degree in near real time. By using machine learning algorithms, it can find unknown fraud patterns. And that's the big change in the fraud side of things. You don't know what you don't know out there. Then you've got claims automation. Certainly it's another hot topic out there in the industry today. But the ability to use AI for the automatic triaging of claims, estimating loss by analyzing photographs of damaged properties, and ultimately providing that straight-through processing, which now many people refer to as either no-touch or touchless claims. Then another opportunity I think is certainly a big one is on the subrogation side of things. I think one of the challenges that insurance companies have out there is the sheer volume and types of data surrounding a claim can mean that many insurance companies miss subrogation opportunities because it's hidden in the unstructured data out there. So again, using AI, it can certainly minimize the number of missed claims cases by looking at both those known and again, using it to identify unknown subrogation opportunities indicators. And then finally, I think AI can be used really for both litigation potentiality and injury management. These are the cases, I think, where suddenly you see a huge financial gain, because what was probably a claim maybe for $10,000, $15,000 can suddenly escalate up to $100,000, $200,000 in not only just the size of the claim, but also you've got all those additional expenses associated with it. So again, if you can identify those claims sooner, then you can hopefully mitigate them before they escalate out of all priorities out there. So again, Maha, what are some of the things that Aspire are working with on the claim side?
Yeah, I would like to pick up a scenario with one of the insurer who had a large partner ecosystem, and the partners can raise claims in individual or in bulk. So the insurer used to receive the claims request via emails with a lot of data populated in Excel sheets, right? So the claims team had to manually raise and process these claims in the insurance core system. They also had to manually look up for documents related to this claim in another app, right? Overall, the turnaround time on claims was very high. There was no transparency on the current status of the claim. There was also difficulty in claims triaging and assignment. And the process was error prone, and it took a lot of human effort to validate a claim, right? So we developed an automated claims processing solution that can process claims payout with minimal documentation. And then the claims investigation was automated, accelerating the overall claims workflow, and then supporting in the better decision making, right? We used AI based algorithms to triage and assign claims for investigation, and also to aid the process of claims approval, to identify duplicate and fraudulent claims. uh, Also, a portal was developed for partners to register claims and view status in real time. So they can register claims either in individual or in bulk, right? And the claims can be processed against any policy or any product or any benefit, and this was completely configurable. And the document scrutiny also was provided in the portal, and the partner can approve claims from the system itself. Also, we developed an FR management process on the portal to handle cases with incomplete or wrong documents corresponding to each claim. Right, the system allows for direct communication with the nominee to process the claims faster. And a dashboard also was also developed to view the claim status, like how many claims are uploaded, how many is pending and approved. And a comprehensive rules engine driven approach was built to increase accuracy of the claims processing. And the self-service tool allowed customers to register claims in real time from any device and also check the status of the submitted claim, right? So overall, doing all these automation, it saved the number of FTs who were really involved on this process and it got reduced to 53, and the turnaround time really increased by 60%, right? And almost 84% reduction in the time spent in manual processing. So this really delivered a huge benefit for this insurer. So I think with this, really, the AI, deploying AI in the and then deploying automation in the overall underwriting and claims process. I think delivers a lot of business value in the process, people, and system across the insurance value chain. Right. I think from a process standpoint, the dependency on third-party systems are reduced, and then we get a lot of ability to customize and configure the rules that are required during the underwriting and the claims processes. And then the real-time decision making has increased, and the time taken for the underwriting, evaluation, and claims adjudication has decreased to a lot of extent, and the turnaround time has increased, right? And then from a people perspective, the errors in manual underwriting and claims processing has decreased, and the accuracy of the decisions made during the underwriting process and the claims process increases to a huge extent. And similarly, from a people standpoint, the resources or the number of people who are required during this processes are reduced, and the overall productivity and the efficiency increases, right, from an operation standpoint for the insurer. And similarly, from a system standpoint, I think the revenue increases and the turnaround time for policy issuance and attending to a claims request also decreases, right? I think overall, to summarize, I think AI and automation delivers a lot of business value in the overall value chain. And Stuart, any views from your end?
I do. I think this is a great slide. I think it sort of highlights where you say whatever technology you've got out there, ultimately you've got to prove the business value and the ROI. And I think a couple of things that really stuck out to me, I think, is the increase in underwriting decision, the accuracy that is there. Like I say, I wouldn't say it's been a finger in the air job for insurance companies, but as I said, begin, you've no idea what is going to be the severity and the claims frequency going forward. So the more accurate you can do in understanding that risk, underwriting is going to help you from a claims perspective further on down the line. I think the other point that's made on here is real-time decisioning as well. Insurance, there's never probably been a real-time decisioning industry in the past, but I think now it's becoming to do that. Like I say, when you're issuing a policy online, in theory, you've got to fully understand what that risk is then. And same if you look at it from the claims perspective. If you're going to do a straight through process of a claim, you want to make sure that it's not a fraudulent claim, because once you've paid it out, it's nigh on impossible to reclaim that money. So I think that there's a lot of things on here really hit home to me of the advantages and benefits of AI from both quotation all the way through to claims.
Great. Thank you, Stuart and Maha, for the insights and those case studies. I think that should paint a picture about the various possibilities and paths to take for the participants. And it's now time for us to move to the questions. And yeah, we have some questions lined up. The first one is, do I need a team of data scientists to develop AI models and algorithms? Stuart, would you like to take that up?
Well, again, it would be great if you did have a team of data scientists out there, and certainly I think some of the larger insurance companies do. But I wouldn't say that that's a hindrance for the mid-sized and smaller ones out there, because I think what we're beginning to see is a growth in what I would consider is AI-enabled business solutions, whether there is applications built for fraud detection by companies like Shift or Frisk, or whether you've got an AI-built solution for looking at underwriting risks for workers' compensation or commercial owners policies from companies like Neurometrics or Conver or Plank or out there. So I think that to me is the mid-size and smaller companies can have AI enabled solutions, but they're probably going to have to go to these point solutions and vendors out there for those capabilities.
Thank you, Stuart. So we have a couple more questions. The next one is, how do you ensure AI models are efficient? Maha, probably you could take that up.
Yeah, sure, Bindu. I think the efficiency and accuracy of the AI models completely depend upon the training of the model, right? Especially with past data and also continuously training the model post live. I think over a period of time, we could attain an increase in accuracy. And also, an important step is really identifying, like, say, model decay identification is also an important step to keep up with the accuracy, right? I think that's my view on that.
Thank you, Maha. So there's one more question that we have here. How do you quantify the business impact of AI? Stuart, would you like to take it up?
Yeah, I'll take a stab at that one. So again, it's always a very difficult question sometimes to answer, because not always the benefits you can relate directly back to AI and the model that's been built. But what I would always say is, before you build the model, before you do anything, you've got to understand what is the business problem that I am trying to resolve with AI and machine learning models. And if once you understand what is that business problem you're going to solve, then you've got to say, okay, how am I going to measure the success of that business problem? Is it going to be with, if you look at fraud, is it going to be with a reduction in false positive rates? If it's underwriting, is it going to be an improvement in your underwriting profitability? If you're looking at it from a customer perspective, is it increasing revenue or etc.? So I think once you then have determined what metric you're going to measure the model on, you then go out, you get the data, and then you build the model. I would say the trouble comes is, in many organizations, they do it complete opposite. They go out there, they've got all this data, and then they build the model, and they say, okay, now how are we going to apply that to the business context? You've really got to start with the business problem first and work backwards, rather than we built the model and then trying to understand how it's going to where, how you measure the success of that model out there. And you've got to constantly make sure you not sort of retune it, but you've got to manage that model as well, because the performance of the model will deteriorate over time. So you've got to see is, okay, the model was getting this benefit last year, but now it's down to 80% functionality. Is there some other data that we need to retrain the model on to make it as effective as what we were anticipating?
Thanks, Stuart. So that was the last question for the day. This brings us to the end of the webinar. And I would like to thank Stuart and Maha for offering such current and actionable insights and examples drawn from the current insurance landscape. I'm sure the participants found it informative. If any of you have queries, please free to email us. We are eager to assist you. Thank you all for joining us, and have a great day.